for you for Euro USD. It's very simple, guys. If you know the concept of smart money strategy or order block strategy, you can understand this like video really well. But if you still haven't watched my first video, I highly recommend you to do that, guys. I talk about gaps, order blocks, when and where banks and institutions take their trades, so I highly recommend you to watch those videos. I have a playlist above this video. Okay, so the first example that I have for you is this one right here. So let me just remove this, and then I want to go backward a little bit. So here, the first thing you need to do is identifying the order blocks or the gaps. So in this situation, we have this order block right here, which is a low probability order block. It's not a high probability order block, and the reason is that after this bullish candle, we had a little bit of shadow exactly right here. See that the next candle got out a little bit, and after that this candle opened inside the order block. So I'm not saying it's invalid, it's just low probability, but since I found it here, I decided to show you this as an example that when to exactly open it and where to move your stop loss to break even. So let's say that we are waiting for the price to get back to this level, and then we can take our sell position. So I'm just waiting for it so market can go up. Okay, so this is actually what it was right here, and yeah, I drew the wrong one, I think. Sorry about that, I drew the wrong order block. It was this one. Yeah, sorry about that. I'm not gonna remove it from the video. It's from here to here. Okay, sorry about that. The previous one was completely invalid. This is our order block. You gotta cover these two bullish candles, and then we see that the price went back to this level, and we have a bearish momentum. You know, some people take their sell position here, put their stop loss here or here, but I highly recommend you to put it outside of the box, which is right here, and your TP exactly right here. So this video is for people who take more than 2 orders. I would say 2 orders, because the first order should be your closest support or resistance level, which in this case is this one right here. This is the closest. Actually, this one is the closest support level that we need to close our position around, like for example here. And the next one could be from here, the same stop loss, to here. Or some people want to leave a runner, but I'm going to show you exactly. So after this, let's just move forward to see what's going to happen. Okay, this one, yeah, that's it. Our first TP got smashed. But the question is where to put your stop loss. Imagine that you want to take your position here, and instead of taking 2 positions, you want to take 1 position, but if you want to leave a runner. So when and where do you need to put your stop loss to break even to make it a risk-free trade? Very simple. After breaking the first swing low, if you're selling, or after breaking the first swing high, if you're buying. So in this case, we have this swing low exactly right here. So it's definitely a swing low, and people take their sell position here. After this price, so we gotta wait for the market to break this support, and then you move your stop loss to break even. So which is in this case, we gotta wait to see when it happens. Okay, so after this candle, let me just go back. After this candle, it got broken. It actually is a shadow, so it stopped out all the buyers here. The next candle, we had a huge spark towards downside. This is when you need to put your stop loss to break even. You gotta wait for a break of a structure. So I'm gonna write it down here. I'm gonna type it for you so we can have a better understanding. If you're buying, wait for the previous swing high to get broken. If you're selling, very simple, wait for the previous swing low to get broken. That's it. wait for the previous swing high, but we are selling here, so wait for the previous swing low to get broken, which in this case is exactly this one right here. So after this got broken, you can move your stop loss to break even and just leave it. I personally take my trades 1-to-1, so 1-to-1 risk to reward ratio is ideal for me, and it's at 10-11 pips, it depends, and it can literally make your day. So if you want to make a living, 10-11 pips a day can literally keep 9 to 5 away. So this is one example in this case that we have. The second example that I have for you is this one right here. So I'm going to move it here so you can always have a glance. And the second one is here. So I'm gonna do a little bit of replay for you, and here we clearly have a high potential demand zone. So this is gonna be a high potential order block. Why is it high potential? The reason is that after this red candle, we had a huge spike towards upside that left a little bit of gap in between, and the next candle never tapped into this zone. It's very, very important. If this candle tapped into this zone and then went up, it would make it a low probability order block. But since we clearly can see a gap in between the previous red candle and the next candle after the huge spike, we can see a space here. So we're gonna target that. We're gonna put our buy limit here, or you wait until market comes back to this level and then you buy. It depends on your strategy, but we have a high probability order blocks right here. So I'm gonna play it until the market taps into this zone, and then I show you where and when you can actually take your buy position and where to put your stop loss to break even. Okay, so as you can see, this candle, not this one. Okay, so this candle actually tapped into our zone. So let's say that you already put your buy limit here, your stop loss here, and your TP somewhere around here. So I usually do it 1-to-1. As I said, I close it here. Let's say you get one here, you get the second one right here. So you want to take it right here, which is already a smashed. That was a huge candle. But let's say that you want to take it here. Okay, 1-to-5. So what do you do? What is the first thing you do after getting into a position? Are we going to buy or sell? Apparently buy. Okay, so wait for the previous swing high to get broken. You got to zoom out, identify every single liquidity that you have around this price. So we have our swing high here, one high here, and that's it. So we gotta wait for these structures to get broken. So let's say we already took this trade and we are leaving this one to runner. So after seeing this huge candle here, so let's say that there was no shadow here, just theoretically there's no shadow here, and we are waiting for the next candles to see how they react. So if I want to play it, you see that it's actually going up. So if you pay attention, you see that this structure is already broken here. So in this case, I'm going to put it into break even. I'm not gonna wait for this to break and then after that I move it to a stop loss to a break even. I'm not gonna do that. I'll wait for this one, the closest one, because as you can see, the previous swing low to get broken, or I would rephrase it to the closest, even this one to the closest. If you want to take a screenshot or anything, feel free to do that. It's very, very important if you're taking more than one position, or if you take one position and you want to leave a runner. This is going to be very helpful for you. So after I saw this candle to break this pattern here, this swing high, then I'm going to move my stop loss to break even. So this is the second example that I wanted to show you, and this is the last one that I want to cover here. So let's go here. I'm going to do that. Let's do this one here. Okay, right here we have, so this is kind of interesting because as you can see, we have a previous low here, not a previous low, we had a support level here, and there used to be so much liquidity sitting here, but this candle, because of the shadow here, it has stopped out every single buyer that bought here and put their stop loss here. So it's this is kind of a technical a strategy that you can take. So after grabbing all the liquidity and after seeing this momentum, you can take your buy position here, put your stop loss here, and then you can leave your runner, or you can have a one-on-one risk to reward. However, we have a huge gap here that needs to be filled, but when is it gonna get filled, we don't know. But right here we have a low probability demand zone, or I would say order block. Why is it low probability? The reason is that after this red candle, we had a shadow here. See, we had a shadow which is outside of the box, and the next one opened here, opened inside the order block, which makes it invalid. Okay, so if I want to play it, I'm gonna wait for the price to hit this zone, and then let's see what happens. So as you can see, it's creating higher highs and higher lows. That's going to give us more chance to kind of be more flexible with our trades. So let's see how long it takes. Okay, so after seeing this candle here, I would personally take my buy position. However, it's low probability. I'm just saying that, guys, it's low probability. It's always better to take high probability trades, but even this one counts. So if you take your position here, put your stop loss below the box, and you want to leave a runner, I would get it up to here. I would get it up to here, 1 to 2, absolutely enough. But some people want to wait until up to here because they believe that the price is going to reach this level to kind of fill in every gap here, or to grab all the liquidity here. So 1 to 8, absolutely insane. So let's say you want to do that. Okay, what is the first thing you do? It's very self-explanatory by now. You gotta wait for, we are buying, wait for the closest swing wait for the closest swing high to get broken. Okay, so where is that? We zoom out, we see, we're gonna identify all the higher highs and higher lows. We have the highest points here and the lowest points here. Since we are not selling, so this one doesn't count. We're gonna wait for this structure to get broken, and then after that we can move our stop loss to break even. So let's see. Okay, boom, after seeing this candle, guys, you can easily move your stop loss to break even and just leave a runner. But let's see how long it takes until you get a stopped out. Okay, so let me just extend it. It was so close to get you stopped out. Okay, here you got a stopped out. That's why I'm saying it's better to have two positions. The first position 1 to 1, the second position you can leave a runner, and if it gets stopped out, you haven't lost anything. That's the beauty of moving your stop loss to break even. And I hope you enjoyed this video, guys. If you did, drop your comment below this video. If you have any question, just simply ask me. I get back to you personally. And if you still haven't subscribed to my channel, guys, do it right now. Turn on the notification bell. I put out so many valuable content on this channel, and I don't have a course to sell you, so everything is going to be 100% free of charge. However, if you don't want to trade yourself, if you don't want to trade manually, and you want an expert advisor to do that for you completely hands-free, which is our trading bot, check out the smarteincubator.com and see everything yourself. I personally don't really I don't trade manually anymore because I gave everything to my expert advisor that trades gold only, and it gives me 10 to 20% profit every single month. Thank you so much. I'm out.